Thank you for joining me on this video. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you minimize your losses and keep more of your profits through our proprietary market signals that are emailed to you every weekend in our weekly stock market-based newsletter, all for less than $20 per month. Today we will be doing technical analysis on the S&P 500 for Tuesday, March 24th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for. And I will leave a link to their site in the description box below this video. So what we're looking at here is a 5-day, 5-minute chart. Each candlestick represents 5 minutes of trading in the S&P 500. And what we can see here today is that we were up 9.38% and closed at 2447.33. So huge upside day in the market. And as you can see here today, this is today's trading. And as you can see, we closed right at the highs of the session. So that is very bullish. Now, a couple of things here. We had 2 days where we closed beneath this blue line. That's 2350. So you can see here on Friday, the 20th, we closed beneath 2350, which over the next few charts, you're going to see why that is so important. And then on Monday's trading yesterday, you can see that the entire day was really below the 2300 level. Today, on the hopes of a huge stimulus plan here in the United States, the market gapped up. We gapped up over the 2350 level and had some volatility. But again, as you can see here, closed at right at the highs of the session and just underneath this 2450 level. Now, this 2450 level will be very important over the next few days. And as you can see, over the last 5 trading days, and this is the reason I wanted you guys to see this chart to start with. Even on these 5-minute candles, look at how this 2450 level has acted as overhead resistance. We had one section right here for less than a half an hour back on the 19th where we got above that 2450 level. But, you can see, even on these short-term candles, you can see that the 2450 level has been acting as overhead resistance. So it will be very important tomorrow. And very telling if we can get over that 2450 level tomorrow. Now, when we pull back and look at a longer-term chart, and this is a daily chart, but it does go back for 3.5 years, and it's a candlestick chart, so the candles are very squished up. But the reason I wanted you guys to see this is here's the 2350 level, here's the 2450 level. And the 2350 level, of course, is where we bottomed at the end of 2018, Q4 of 2018, before we made this last leg of the bull market. And then you can see back here in 2017, there was quite a bit of trading right around this area for several months. And of course, 2017 was the first time we had closed above the 2350 level. And then again, as you can see, once we got above that, we kind of traded around that area for a little while and then moved up to the 2450 level, which 2450 acted as overhead resistance for about 6 weeks or so there, and then it acted as a support level. We dipped down below the 2450 level for a few weeks, and then once we got above it, then we were able to stay above it until Q4 of 18. So hopefully you're starting to see here that both the 2350 and the 2450 levels on the S&P 500 are very important. And now what we're looking at is a 10-day 30-minute chart. So each candlestick represents 30 minutes of trading on the S&P 500, and it's just another way again to look at this information. But you can see over the last 5 trading days, going back to the 18th, we have not been able to close above on these 30-minute candles. None of these candles have been able to close above this 2450 level. So over the last 5 trading days, I know it's a short period of time, but a lot of times when you put the market under the microscope, so to speak, and start looking at these shorter term charts, you can really start to see some patterns emerge. And this, as we can see here on a short term, and then as we looked at on the last 3.5 year chart, on the daily chart going back 3.5 years, we can see that this 2450 level has some significance. So the direction that we go over the next few days on the markets will be extremely important. I do want to see if this rally is for real. What I want to see is I want to see us close at least 3 days in a row above the 2450 level, preferably all days being positive. I don't want to see a positive, negative, positive. I'd like to see 3 positive days in a row above 2450 if this rally is for real. And then preferably, I'd like to see those closes above 2450 happen without the announcement of any more stimulus from the U.S. government. I want to be able to see this market move up on its own merits, not on the back of stimulus plans. That would tell me that we actually have bottomed. I think it's way premature. We're at the beginning of a bear market. These things don't just last a couple of weeks, guys. One of the shortest bears on record lasted 6 months. So more than likely, this is nothing but a bear market rally, which is, again, why we were up 9.38% in one day. Remember, these huge rallies like this don't happen in bull markets. These, the biggest up days in the stock market over the history of the stock market have pretty much all happened in bear markets. So let's not be faked out by one big up day in the markets on the back of a massive stimulus plan. But again, 2450 going to be absolutely critical going forward. And then when we pull back and look at a longer term chart, again, this is a 7-year chart where each candlestick represents 1 week of trading on the S&P 500. And of course, last week we closed for the first time really since 2017, beginning of 2017, we closed beneath 2350. So the fact that we're back above that level, as you can see, has significance. Again, there's where we bottomed in 2018. First got above the 2350 level back in February, March area of 2017. Had some trading right around there for a couple months. So this 2350 level is absolutely critical that we stay above it. So we're kind of in a range here, in between 2350 and 2450. So we will really need to keep our eyes on both levels, the 2350 and the 2450 level. And, whichever way we continue to close, I think will tell us the direction of the markets, at least in the near term. Now, when you hear, a $1 trillion stimulus, a multi-trillion-dollar stimulus plan, I don't think most people understand just how big a trillion is. I have a video out on my YouTube channel, How Much is a Trillion? And I'm kind of surprised that it's only been watched a few times. I've had it out there for 4 months. Kind of blows me away. This is extremely important information, guys. It's less than 7 minutes long. I would really encourage you at this point, so you can get your head wrapped around just how big of a number a trillion is. Go out and watch this video, because remember, we have tens of trillions of dollars of debt, funded liability debt in the United States. And so when you hear these $1 trillion packages and $1 trillion of debt, I think we need to get educated, all of us, on how much a trillion really is. It is a huge, huge number. So I would encourage you to go out to my YouTube channel, check out that video. And of course, while you're out here at the Rodney E. Constable Success channel, if you have not already done so, please subscribe, give me a thumbs up on this video, leave a comment, and I will, of course, see you in the next video, but I've got a little bit more information to share with you before you go. Points to remember. Bear market rallies are faster and more violent to the upside than rallies during bullish periods in the stock market. Earnings for companies around the globe are likely to be substantially lower than in 2019 and perhaps lower than in the last several years. If this rally attempt is real, we will need to see follow-through. I personally want to see 3 positive days in a row in the stock market. I want to see 3 closes in a row above 2450 on the S&P 500. And I want to see the markets moving up on their own merits, not on the back of trillions of dollars in stimulus. As intelligent investors, we cannot afford to be faked out by one big up day in the beginning stages of a bear market on the back of a massive stimulus bill. Going forward, Simple Market Signal subscribers will have a huge advantage because they will have clear market-based risk-reward signals to help guide their investment decisions.